Okay, so we got Erik Townsend, Brent Johnson, Peter Schiff, and Tim Sykes is going to sit beside Peter Schiff. Sit between Erik, because I have a feeling there might be some friction on this table. Rules of engagement, gents. No punching. Let's try to limit the F-bombs. Moving forward, though, Peter, in 30 seconds, or let's say 1 minute or less, okay, 1 minute of our realm time, why is the US dollar going to go lower, in your opinion?
Well, the U.S. dollar's been going lower for a long time, although we've had a rally in recent years, and a lot of it was based on the optimism that the Fed was going to be able to, complete the normalization process of interest rates and wind down its balance sheet, and the dollar's going to go lower because neither of those things are possible. In fact, the U.S. stock market slipped into a bear market in the fourth quarter of last year, and the Fed turned on a dime, and basically the rate hikes are now off.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
The next thing they're going to be doing is cutting rates back to zero, and I think they're going to call off the balance sheet contraction. They're going to launch QE4, and I think the dollar is going to fall for that reason. I'm surprised it's already not lower given the big about face, but I think it's because people are still relatively optimistic about the U.S. economy, and I think that as the year progresses, that optimism is going to fade.
So, Brent, we've gotten to know each other a little bit after a while. Tell Peter why he's completely wrong. Or is he?
Well, Peter's right long term, of course. Everybody knows this. The dollar
but so is a broken clock twice a day.
The dollar is an absolutely horrible currency. Its flaws are innumerable. But it's better than every other fiat currency out there. And before this is all said and done, the dollar is going to go much, much higher.
And what's your take on the U.S. stock market in the near term, meaning next 12, 18 months?
Higher.
Erik, what's your take on the U.S. dollar over the next 12, 18 months?
Higher, possibly much higher.
And the U.S. markets?
I think lower.
Okay, interesting. Do you want to debate Erik on that quickly, why you think the U.S. markets are going higher?
Well,
according to the milkshake theory?
Sure. So I think there's a misnomer out there that higher rates necessarily mean lower stocks. I mean, if you go back to the last 12 times there's been a hiking cycle where interest rates rose, stocks went up 11 of those 12 times. In some cases, dramatically so. There's been cases in the past where we've gone into a recession that lasted 12 to 15 months, and during that time period, stocks went up 15%.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
There's no guarantee that just because rates rise or we go into a recession that means stocks fall. And in a relative world, and believe me, the world is in a very, very bad place right now. In a relative world, U.S. stocks look pretty good.
So, Erik, assuming the thesis on rates, as Peter said, are going to zero, do you believe interest rates are going to zero? There's no more rate hikes?
I am undecided on more rate hikes, but I think that we're very late in a credit cycle globally. I agree with Brent that the U.S. stocks have looked better than anything else in the world, and the reason that we see so many other stock markets around the world moving into bear markets and the U.S. has only stumbled a little bit, not a whole lot yet, is because we are the cleanest dirty shirt, without a doubt. And there's a certain effect of flight capital from other countries around the world going into U.S. stocks because they're performing better than anywhere else. But I think what we're seeing is the U.S. is trailing behind a global economic slowdown, and I think that it is eventually going to catch up with us. Now, it's entirely possible that that phenomenon of other countries liking U.S. stocks better is going to result in maybe one more push higher. Maybe it is more all-time highs. I've been wrong about this before. I've been early thinking that the market was headed down, and it's proven me wrong by heading higher. It's entirely possible, but I think we're at the end of a cycle, and we're getting awfully long in the tooth, and I think probably the high is in for this longest bull market in history in stocks.
Peter?
Yeah, well, I think the longest bull market in history already ended. I think we're in a correction right now, the first correction of the new bear market. But this idea that the U.S. is the cleanest dirty shirt in the hamper is a bunch of nonsense. I mean, the U.S. economy is a gigantic credit bubble. Debt is at an all-time high on an individual level when you look at credit cards, student loans, auto debt. But more importantly, the national debt, we're now running $100 billion per month deficit spending. We're borrowing more money now during this recovery than we did at any point during the Great Recession. This next recession that's coming, we're going to see $2 trillion a year plus in deficit spending by the U.S. government. The trade deficits are at record highs. And you're talking about the U.S. stock market looks good. It's at the highest level it's been, I say, relative to the foreign markets that it's been in 100 years.
But Peter, would you rather be in a euro or the U.S. dollar?
Well, if those are my only two choices, I'd take the euro.
Okay,
Fortunately,
ruble,
that's a big
but
world.
of any of the currencies, what do you get paid in? Do you get paid in U.S. dollars?
Well, I bill my clients mostly in dollars because most of my clients are in America. But I don't keep dollars. I don't own any dollars. I get rid of them as soon as I get a hold of them, and I buy something else that I have more confidence in. But, when we go back down to this recession and, the deficits explode and the trade deficits explode, people forget. People got optimistic about Trump. Trump's got 2 more years, and then we've got a Democratic socialist. We're going to make Canada look good. You think you guys got socialism up here? Look what we got going down our side of the border.
That's not that hard to do.
So look, we're going to go off the charts as far as government spending is concerned.
So the question I'm going to go, okay, so you said you spend it right away. In what other currencies?
I don't spend it. I turn it into something else.
So what is that something else? People
remember, what gives fiat currencies value, because they have no intrinsic value like gold. So you have to look at relative trade imbalances. Do you have a trade surplus? Do you have a trade deficit? If you're running a trade surplus, then people need your currency. We don't have a trade surplus. We have a deficit. The only reason people want dollars was because they wanted to buy our financial assets. But once they don't want our treasuries and they don't want our stocks, there's no demand for dollars. We have no domestic savings, and we have these huge deficits. So we're going to have to print a lot more money than the Europeans are going to be printing, than the Japanese are going to be printing.
Okay, but they're at negative interest rates. So Brett, do you want to jump in? Do you agree with Peter there?
It's a good thing we're passing this microphone back and forth, or else I'd never get to talk. But I mean, Peter, I think probably better than anybody in the world is able to understand and communicate the Austrian School of Economics and what will eventually happen. And being able to do that lets you be right about every 10 or 15 years. And the problem is that...
Ouch.
No, I mean, I respect Peter. I think he's got a very good understanding of it. But these conversations have been had, the exact same conversations for the last 6 or 7 years. And listen, I am a huge advocate for gold. Everybody should have gold in their portfolio. It's a critical form of insurance against the financial, political, and social unrest that will come. But the reality is deficits is demand for dollars. The more the government buys dollars from the market by issuing treasury bonds, pushes the dollar higher. We're no longer printing money. The supply is falling.
So
demand applies to dollars Peter, the same way it applies to gold.
Rex, you may not even be aware of this, but right now, just before Christmas, I locked in a bunch of US dollars, cashable daily at 2.7 at a big 5 bank. And I was talking to some of my American subscribers that the best rate they get daily is 1.5. That clearly tells you that outside of America, there's a demand that they're willing to pay a higher rate. So that supports Brett's theory that, hey, US dollars are in shortage, which... Peter, you don't agree with.
The idea that larger deficits are good for the dollar, the fact that we have to borrow more money doesn't make the dollar stronger, it makes the dollar weaker. Because people are not going to want to lend us that money, especially when the dollar is falling. I mean, there's demand for dollars as long as people think they're going to go up. But when they don't think they're going to go up anymore, there is no natural demand for dollars because we have a natural surplus because we have huge trade deficits every year and we're throwing dollars out into the global economy. But meanwhile, you have all these dollars already invested in debt instruments that are denominated in dollars. But as the U.S. economy weakens and the Fed starts monetizing all those debts again, which they will, there's going to be no demand for dollars. And the dollar's going to fall like a stone. And it's not like I'm right every 10 or 15 years. I mean, you have to actually follow the things that I'm saying, because I think I get a lot more stuff right about what's going on in the economy than most people who are just measuring whether they're right or wrong by looking at the U.S. stock market. It doesn't make you right just because the U.S. stock market is going up. Just because the bubble gets bigger doesn't mean that you're right. And it's not like I miss out on the stock markets. Yeah, I've invested in stocks outside the United States, and for the last few years, they have underperformed. But I don't invest for just that short a time horizon.
So you're not like Tim, 2 hours to 2 days.
A case can be made for both, the U.S., the dollar, all of this stuff. It's all guesswork, and we don't really know where the market is going. So why do you want to play guessing games? I mean, if you want to be on CNBC, if you want to wear, fancy suits and you want to be all powerful, that's fine, and you can raise billions of dollars with your thesis. But as an individual investor, individual trader, I just stick with what's popular. I think that the U.S. dollar is pretty safe compared to all the other options. Sure, maybe you have a little gold because, it's always fun to have something so fucking boring. Have some euros, have some Swiss francs. The U.S. market probably will go lower in the next year or two because this is, very long in the bull market. But how much lower? Are we going to have a great depression? Are we going to have a big crash? I don't know, okay? If you stay liquid and you stay on the sidelines, you don't have to play these guessing games.
Okay, but you're liquid in what? You're liquid
what do you have against
U.S.
suits?
dollars.
I have a suit somewhere. No, I have mostly U.S. dollars. I have some Swiss francs. I have some euros. I just don't think that any of this stuff matters if you truly want to get rich. Forget about making like 5, 10, 20%. Focus on, guessing games that are, more predictable. Wait for the next big Bitcoin cryptocurrency boom and bust. You can make money on both sides. Look for volatility. Enough of this debate of all this boring fucking shit.
Okay, Rex.
That's my academic opinion.
I'd love to see your transcripts going through too. Rex, now as someone who's seen what I think the demise of administration in Canada and leadership from our grand old administration, when you see a country depleting its precious reserves at a loss, if you look at what's going on in Alberta, if you see how we as a nation have allowed imported protesters get rid of the rule of law because we don't want to offend anybody. The social license has gotten ridiculous because who actually issues the social license? As a Canadian, where do you see the Canadian dollar against the US dollar?
I tell you, if you were asking me about where the dollar goes, either the US or the Canadian, it's much like that John Cabot story I told you about going to Beijing and ending up in Buena Vista. I'm the very last person you should ask about currency speculation of any kind. But what I will say to you is this, is that if we maintain at a purely political, I cannot contribute to this, at a purely political level, if we continue to undervalue to the degree that we are undervaluing those things that truly count and those things that are truly real, and instead decide that our main energies are to be put towards some vague idea of what might happen in 2100 when there will be no one around to measure, and secondly, to build policies that are actually absolutely obstructive of the best things that we have, then as far as the value of the dollar, ours or the Americans is concerned, I think by that time, that question will be moot. We have stresses in this confederation because we have forgotten the most basic axiom of all. The main business of business is business, which is one way of saying that the thing that you are at, the thing that you are supposed to do that. But instead we hop off onto huge causes which are not our main business. You see it in banks and hotels. If you go into a hotel these days, it's like going to a seminar. They want to know how many times you're going to take a shower, whether you like the sheets to. Hotels are not in the business of saving the Amazon rainforest. They're in the business of giving you a place to sleep. Governments are not in the business of saving some other parts of the planet. They're in the business of basically giving new strength to their own country.
So I assume you think that if Justin Trudeau's last name wasn't Trudeau, with his credibility, he wouldn't be the leader of our country.
No, the last name was the big gift. That's a whole other discussion. The dynamic of politics these days, celebrity in a very cheap understanding of the word, just having a name that's known, Kardashian, empty of content, empty of achievement, but enough for recognition. That counts for a hell of a lot. Secondly, when you have one government in power for a long time, it has always been, that's one cycle I understand. It is always the case that after a while, there will be a flip. I think he's immature. I don't think he has the conceptual capacity for the position that he holds. And
But he dresses up really well.
Well, I think, unfortunately, his particular enthusiasms, which are grand and global, but try to get him to visit, the small town or go up to Fort Mac for about a week and taste what it's like when things don't go right.
I agree.
That comes at a cost. That's true, by the way, of an awful lot of our politicians, not just him.
So let's go back to what this panel's about. U.S. dollar, oil, or gold. Brett, where would you think's the number one performer of those three? Or do you think all three are going to suffer this year? Or do you think U.S. dollar is the place to be over the next 12 months?
Over the next 12 months, then I would say the dollar, without question.
And then so
gold.
dollar's up. What about gold?
I think the gold will go down initially, but I think we're getting close to a point where they're going to go up together.
So Eric's going to get to $1,000 gold question we're going to have. Do you see gold going to 1,000?
Very possible.
And oil up, neutral, or down?
I think neutral or down.
Peter?
Well, I think if gold was going to go to 1,000, it would have already done it when the Fed was hiking rates. Now that they're done hiking, I think the chances are very slim that gold's going to 1,000. Probably slim that it'll go back below 1,200. I think it's headed higher this year.
So you think rates are going to go down?
I think short-term rates are going to go down. Long-term rates, that's a different story. I mean, the Fed could easily
So do you see
lose
any
control.
rate hikes in 2019?
No, I think there's more likely that we're going to have a rate cut in 2019
Brett,
than a rate hike.
how many rate hikes are we going to have? Are we willing to bet a gold coin?
I'll bet a gold coin.
Okay, everybody
Wait,
saw it.
On what? You're betting how many? You're three rate hikes?
No, just no. The bet
you
is
said
no.
two. You
no,
guys said two.
No,
Yeah,
let's bet.
well,
No, we'll make it simple. Either a rate hike or a rate cut. If it's a rate
no,
hike,
well,
Brett
I'd
wins.
have to win.
You didn't
so
want to
if
make
they
this
don't
bet
do
last.
anything, because it's the most.
Don't gamble on guessing games. Come on.
Let's just do it.
Huh?
A rate hike, he wins. Rate cut, you win.
All right, what the hell? I'll take it.
Okay.
Even though the odds are
A
against me, I
Canadian
should
1
have
ounce.
odds on it.
Okay.
I think, if you say US dollar slightly up, oil slightly up, gold slightly up, none of which is going to make anybody rich anytime soon.
Except those drug dealers and strippers.
Now you have your priorities.
And this is the interesting thing. We brought Tim in the back, and Peter and I, Jimmy in the back, and 7 people came to take photos with Tim. Peter and I are just hanging out, drinking water. So there's something to be said about this. You're the king of the fanboys.
My people are still growing up. Your people are dying. It's cool. We'll see who wins. Who's going to be alive in the next...
The alligator always wins. Don't ever underestimate the alligator.
In the next 10 or 20 years, who are going to have more people alive?
How do we make a bet on that?
Who's going to be more alive in 10 or 20 years? My fans or your fans?
I think my fans, because yours are going to grow up, and then they're going to be my fans.
Oh!
Whoa!
Touche! I'm not worthy! I'm not worthy! I'm not worthy!
Okay, Eric.
U.S. dollar is definitely what I think is most likely to go up, but I would specifically emphasize for more sophisticated traders who can do ratioed pair trades, think about long dollar, long gold. I do think gold has a good chance of going down before it goes up, but the scenario where both gold and dollar go down at the same time is almost impossible for me to conceive. So if you look at the gold dollar as a hedge, there really is a pretty strong argument there. Just be ready for the gold to take a dip before it eventually follows the dollar higher.
And a dip is what?
I think 1,000 is possible. I think that...
Because you realize 50% of the producers have a negative return at $1,000 gold.
I think that what becomes important at those numbers is not anybody's break even, it's cash cost of operations and how many people are forced to actually cease operation. And then you've really got a sentiment problem. You've got to remember that gold is different from every other commodity. There's plenty of gold that's already been mined that people have to sell if they are panicking. So it's a question of how many people are panicking for the wrong reasons and doing the wrong thing. You can't stay down below, I don't know if the cash cost number is what, around 900 or so? You can't get below that where everybody has to shut down production and stay there for very long unless people are getting really, really stupid.
And I guess the question there is, what is the US dollar? Because when you start counting FX in the production, the Russians, the Chinese, people forget China's the largest producer of gold in the world, not the Americans, not the Canadians, not the Russians. So you can see what their currencies are. So there's a lot of factors that may depend what price of gold can we go down to depending on how the US dollar is doing. Rex, do you have any comments on the current, which of those three are going to do well?
Not at the level of sophistication of these people. I'll make one projection.
Well, hold on. Don't put yourself that in. Tim focuses on 2 hours to 2 days.
I'll put one thing out there. We're in the middle, in Canada, we're in the middle of an election season. You got a provincial one in Alberta, which is now critical for the whole
oil patch
tenure and texture of all Canadian politics. And then, of course, you got the federal one coming up. I don't think we can continue to live with this hyper dance over what we do with pipelines and oil and all of the spillover uncertainties that come out of that. It's not a time to predict, because elections themselves have got very peculiar dynamics, as we saw, say, with Brexit. But it will not remain in this state, and the current structure over which resource industries are mandated and regulated, etc., that has to change or we will be hurt.
So, Brett, what percentage of your portfolio is gold? What percentage are you in US dollars? And what percentage are you exposed to oil? And when I say gold, break it down. Are you just buying the ETFs? Do you have physical gold like Peter, who has a big bundle under his bed?
So I have physical gold. I don't own any of the miners right now. Again, I think everybody should own physical gold as a portfolio.
And where do you store this physical gold? Because Tim wants to know. He doesn't believe in this stuff.
We've had it in Switzerland and Singapore and the Cayman Islands. But you should have some at home. Don't tell anybody where it's at. Just buy coins and put it away and don't tell anybody.
Don't show it off at a Super Bowl party.
You don't want to have a target on your back. I have probably, 20 or 30% in cash, and I've got 20 or 30% in stocks.
Peter, what's your breakdown?
I don't know my exact percentage, but my personal portfolio or what we're doing?
Your personal. Not what you're selling, what you're doing.
No, well, I have a lot of money in gold stocks, as far as my
So
portfolio
juniors,
stocks.
mid-tier producers, where are you?
Yeah. No, more the senior producers. But I also have a lot of global stocks that pay good dividends. I have money I have more in non-gold stocks than gold stocks, but I have a lot of gold stocks in my portfolio. Relative to, I could be 40% gold stocks and the rest are non-gold stocks. And some of those are energy stocks too, but most of them are not energy stocks either. But they're just good businesses that I like around the world and currencies that I like. I get a lot of dividends coming from them.
And physical gold, what percentage?
I have physical gold too. I'm not sure what overall percent is, but I have gold in places around the world. And I've got whole gold that I store, in my own safes. Okay.
Tim, I know you're 100% cash right now. But when you grow up, what are you going to do?
I'm never going to grow up. I'm going to be a Toys R Us kid forever. But I have about 80% US dollars, roughly 10% Swiss francs, 10% euros. No gold, no assets, no commitments, all fun.
So I think we're going to know we're in a trading frenzy when Tim Sykes is pitching how to buy and sell gold. Let's see that in a few years.
Give me the next big sector. I'm waiting. There's no hot sector right now. So we're waiting for the next crypto. Maybe we can, put our minds together and come up with some hot sector over the next few,
Those
years.
don't come around that often.
We need one. I'm bored. I'm watching football games for entertainment these days and getting in fights with random people.
I have a very small token exposure to gold stocks, a minimal exposure. I'll be the first to admit that it's probably too small. I'm being very aggressive and betting that I can time the market, which is often a mistake. And I think that we're going to see an opportunity to buy gold lower. I do think
over the next 12 months time frame.
I don't know about that. Probably, maybe. It really has more to do with the dollar than it has to do with gold. I think that if we see that opportunity, that $1,000 break that I think may be coming in the next couple of years, it is a generational opportunity to buy gold. I definitely see that, and I think that when I'm long gold substantially, I will still want to be long dollar index futures as a hedge, because if the gold continues to go down, the dollar is going to save the day in terms of its upside.
So what percentage in dollars are you cash right now?
Well, I'm almost entirely in cash because I trade futures, which is a different mechanism, and you have to keep a lot of cash as a margin, as a security pledge. But in terms of allocation, I'd have to.
Any exposure to oil companies?
I don't trade oil equities. I trade oil futures and
Okay.
particularly crude oil spreads. And
Okay.
so
And you're bearish moving forward for the next 12 months.
I'm bearish with the caveat that anything can happen geopolitically in the oil market.
Rex, are you allowed to invest in the resource sector as an employee of CBC?
It's not a matter of being allowed, it's the capacity. I have a picture of gold. So that's about as far.
That's all you're allowed as an employee of a Canadian Crown Corp?
And as far as the spread over various other currencies and resources, this is a very interesting novel. Thank you for bringing me here.
Hey, Marin, can I should just make a point real quick. I'm looking at this as a U.S. dollar investor. You know, if you're a Canadian dollar investor, if you're an Australian dollar investor, if you're a euro dollar investor, it's a much different story. I mean, I think those currencies are going to go down significantly versus the dollar. And in those cases, gold may do very, very well, or relatively better than in the U.S. dollar. And I also want to point out that I'm not saying that the dollar is going to go better because we've done a fantastic job of managing our finances.
Oh, all Americans think you're better than us.
Well, you know, I'm not one of them. In fact, I think we have a lot of sins to pay for, and I think we will indeed pay for those sins.
Do you think the dollar will go up even if the U.S. economy goes into a recession?
Yes.
Why?
And here's why. Because it's not about the dollar, it's about the debt. There are more dollar-denominated debt out there by international entities, non-U.S. entities, than, about half as much of the dollar-based debt in the world is by non-U.S. entities as it is by U.S. entities. So whether they want to leave the dollar or not is without question. They would love to leave the dollar, but they have to pay off the debt before they do it.
But if we go into a recession, our budget deficits, our government borrowing just skyrockets.
Our budget deficit has already skyrocketed. $1 trillion deficit is going to become a $3 trillion deficit.
Yeah, but it was only manageable before when the Fed was monetizing it all. The Fed is monetizing none of it now. And so that is the big problem. So the only way we could have a recession without interest rates really pushing up and making it another financial crisis would be for the Fed to return to quantitative easing.
Wrong.
And, well, how else would that? Okay, so
Tell him why he's wrong. Why is he wrong?
Because there's dollars and there's capital in the world that's located outside the United States. And when those economies that are in just as bad a shape as the U.S., when they crumble, they will flight to the thing that they have to operate, which is dollars.
They don't have to have them. And if
How do you service your debt if you don't have dollars?
Because as the dollar goes down, it's going to be easier to service that
Well, if the
debt.
dollar's going down, why does the Fed need to print it?
No, they're going to have to print money to buy all those treasuries that we're selling because we're in a recession. You know, when tax revenues go down and expenditures go up, and we have $200 billion a month that we need to borrow, and borrow it from who? We can't borrow it from Americans because Americans don't have it to lend.
Yes,
so we have to go around the world with our hat in the hand.
Let him give his
The rest of the world has not been buying treasuries for 2 or 3 years now. This is not new. This has been known for a long time. We've been self-financing for the last 3 or 4 years. We were buying treasuries at 1.5%. I'm sure they'll be more than happy to buy them at 2.5%.
Look at the recent auctions. Look at the bid to covers. Look at what's happening with the spreads. Look what's happening in some of in the loan markets. I mean, look at the auto sector in the U.S. Look at that. Look at the
auto sector in Germany. Look at the auto sector in China. Look at the auto sector in Brazil. Look at it in Canada. Listen. Look, this is all going to blow up.
Chinese buy cars for cash. Americans have no cash. They buy everything.
Hold on. Is China doing QE or QT right now? Is China doing QE or QT right now?
Well, I don't know what they call it, but yes, they have an expansionary monetary policy.
Wrong. The Chinese balance sheet is declining because they're spending all their dollars to finance the peg. The Chinese central bank balance sheet, the PBO balance sheet, has gone from 4 trillion to almost 3 trillion, and it's killing their economy. It's why they've had to drop the loan rate, the reserve ratios, in order to provide more credit to the system. But their balance sheet is actually shrinking.
Well, and that's a good thing.
Okay. Why is it a good thing for Chinese balance sheet to shrink but not ours?
No. Our balance sheet, they're shrinking it now. They're not going to be able to maintain
We're
that.
shrinking ours because we want to. They're shrinking theirs because they have to.
No, we're shrinking it because we have to follow through with that in order to create the illusion that we can continue to shrink it all the way back down to where the Fed pretended. But they're not going to be able to do that when the deficits skyrocket.
Hold on. So listen. The U.S. is going to pay for all of these sins. We have borrowed an incredible amount of money. It's all going to blow up. But China has extended more credit in the last 30 years than we have in the last 300.
Well,
They are a Keynesian's
we
wet dream.
owe the Chinese. It's not the other way around. And China's trade surplus with the United States are at all-time record highs. It is not a sign of weakness that you have a massive trade surplus. It's a sign of weakness that you run huge deficits.
Is the Chinese current account positive or negative? And what trend is it on?
Yeah, well, I know now that if you don't count the United States, but it's not nearly as big as our current account. Our current account deficit and trade deficit is massive.
Of course it is. We're the world reserve currency.
Yeah, but you can't stay the world's reserve currency and do that. We became the world's reserve currency because we're the world's biggest creditor nation, and because we had enormous trade surpluses, and because the dollar was convertible into gold. The characteristics that we have today are not compatible with issuing the reserve currency.
And that is why we will eventually lose the world reserve currency. It's a mathematical certainty. But the function by which we lose it is the dollar's strength, not its weakness. And that's what we're going to see over the next 2 years.
Eric, which side of the debate are you on?
Oh, I agree with the guy who's right more than once every 15 years.
Can we be more specific?
That would be
be me then?
Okay.
Here's really the point I want to make. Everybody should own gold. This is all going to go down the way that Peter has been describing.
Tim, are you listening?
It is going to happen. But nothing in this world is certain. And I know that many people that come to these conferences, let's give me a show of hand, who has more than 10% of their portfolio in gold? Who has more of their portfolio than 20% in the gold? How many more than 30? How many more than 40? Okay, if you have other sources of liquidity, then that's perfectly fine. And if you truly are a long-term investor and you can ride out another 2 or 3 years, that's fine. But if you've got more than 30, 40, 50% of your portfolio in gold, and when it goes to $1,000, you have to liquidate it to live, you're a distressed seller, not a distressed buyer. So while what Peter is saying is absolutely going to happen, it's not guaranteed it's going to happen tomorrow. And I believe it's going to go the other way in the very short term. It shouldn't. It's not fair. It's not right. But it's what I think is going to happen. And I think you need to be prepared for that.
I don't think the dollar is a great place to prepare.
It's a horrible place, but it's better than everything else.
It's not better than everything else. And the U.S. stocks
which other fiat currency is better than it?
Well, I think just about any major fiat currency would be better than the dollar, given the fundamentals of the U.S. economy.
Really, the euro?
So Draghi's going to quit you at QE?
I think that you've got a better chance of the Bundesbank pushing the ECB. When we get a pickup in global inflation as measured by consumer prices, when you start to see that, I think you're going to see a more likelihood that the ECB is going to react to 3 or 4% inflation than the Fed. I mean, the Fed is going to talk tough, but they cannot afford to raise rates to try to do anything about inflation because we can't afford to pay. We have too much debt, and the short-term nature of the debt is what actually has killed us because the whole debt is, T-bills. And so whenever rates go up, it affects the entirety of the national debt, not just a small amount, not just the new budget deficits, but everything we've borrowed in the past. It gets more expensive to service the debt.
Why was both Argentina and Turkey down, both in their currency and stock market, 50% last year? What was the driver?
Well, the driver for the emerging markets was the idea, right, that the Fed was going to keep on hiking and that they were going to keep shrinking the balance sheet, but that the budget deficits were going to be there and that the world was going to finance these deficits and it was going to crowd out investment in the emerging markets. There was going to be a move into the dollar and it was going to starve capital in other parts of the world. And it was the belief that this was going to happen that was putting downward pressure on these currencies and upward pressure on their inflation rates and destabilizing the markets. But I think everybody who is making those bets is betting wrong. I think the Fed is going to go back to zero. They're going to go back to QE because we are on the verge of a much worse recession than the one that we came out of in 2009, because all of the problems that created that recession have been exacerbated by the very entity that caused it, the Federal Reserve. We didn't solve anything. We just took a credit bubble and made it bigger. And that bubble has popped. The Fed, I'm going to talk a lot about that tomorrow, but the air is already coming out of that bubble. And so this next recession is going to be greater than the Great Recession. The world is not prepared for that. They are completely on the opposite side of that.
So the last question before we take questions from the audience is just a simple yes and no. No declarative justification needed. Trump, does he win 2020? Yes or no? Brett?
Yes.
No.
Yes, if the market remains high.
Well, what
These
if it's a
millennials,
bear
they
market?
just don't listen. Eric.
Yes.
Yes.
Wow. I don't even know what your answer is, but okay. Okay, let's take some questions from the audience. And just so you know, Tim and I are friends. We have fun with this.
Where do you think oil is going in the next 3 years?
I think it's going to be very volatile. So I think it could get into the 30s, and you could see as high as the 60s. Subject that, like, the Strait of Hormuz, which about a third of all seaport oil moves through, doesn't shut down. So I think we're in that 35 to 65 trading range.
I'll take the over on that one.
What do you think is going to happen?
I think it's going to be higher than 65, so I'll take the over.
Okay.
Question for the panel.
Yes. Sorry.
Another question concerning the elephant in the room. When will you start buying renminbi? Today, renminbi is 6.7 renminbi to a US dollar. And George Soros has mentioned that it's going to go about 1 to 1.
Who said it was going to be 1 to 1?
George Soros.
George Soros, 1 to 1.
Wow.
Brett?
I think that the yuan peg is going to break, and I think it's going to go from 7 to 9 or 10.
Peter?
I think the opposite. I think that the trend in the RMB is up. I think it'll eventually get to 1 to 1.
Are you an agent of George Soros?
Huh?
Another conspiracy theory?
But
I abstain.
Okay.
Guessing game.
Eric?
I agree. It's a guessing game. No strong opinion. I think anything's possible, but definitely not 1 to 1.
Do you see that they would actually break the peg? That's a bigger question.
I think eventually. Well, I think they're going to break the peg on the Hong Kong dollar too. But I think it's going to go up. I think they're going to peg the Hong Kong dollar to the renminbi instead of the U.S. dollar and float the renminbi. Ultimately, they'll probably back it by gold. If they're smart, that's what they'll do. And then they'll have the predominant currency in the world if they do that.
Brett, do you agree?
China is not going to back its currency with gold. I'm sorry to tell you guys that, but they're not going to do it.
I have noticed that in my neighborhood, there's no sales of houses, but there's a hell of a lot of houses up for sale in Shaughnessy. So, there might be some discounts for Lamborghinis, though. Yes, sir.
Where is Alberta going to go if it does not get any pipeline support
Lower.
from the rest of the country?
The big question is for the panel, and where's Alberta going?
Politically.
Look, we are producing incredible amounts of oil, and when a government says to pull back production, which kind of sounds like the National Energy Program that Trudeau's dad brought in. Rex, where's Alberta going if we don't build more pipelines?
I don't think it's as extreme that dragging out separatism as a word other than as a rhetorical strategy is justified. I saw just before I came over here that 87% of Albertans think the absence of a pipeline is a crisis, not a difficulty, not this, a crisis. I think that the backlash, which is emergent, you see it in the convoys, there is a deep, it really is, it's felt at street level, a deep sense of dissatisfaction that doesn't go against the idea of country, but it certainly goes against the idea of the center, as it's called. I don't think it will reach separation, that's a nice thing to say, but I think it's more agitated than it's been for at least 30 years.
Does a vote happen? Does a referendum vote happen like in Quebec?
Not within the next 1 or 2 years, that's for sure.
Okay.
But you will have a lot of people on the side and on the edges that are attempting to stir it to that particular direction. But in the meantime, just the crisis between BC, Alberta pipeline, and Alberta, Saskatchewan, Ottawa, that's a tension that cannot continue to exist on a sustained basis and function. Alberta is in the worst spot it's been since the previous oil crisis, and I think this is even deeper.
This question is for Erik. Early in the secular bull market in gold, which bottomed around 250, around 2000, there was a famous analyst from an earlier cycle that kept talking $180 gold before we moved up, and he held that position for several years as we moved on up into the high 400s or 500s. And I'm wondering at what point cause you to reassess, what price point on gold would cause you to reassess that we're going to see $1,000 gold before we move substantially higher?
Question is, when do you admit you're wrong?
I wouldn't used the gold price outright to make that decision. When I would admit I was wrong would be based on the correlation of dollar gold. And I think the reason that I'll be proven wrong, which is entirely possible, is if we see dollar and gold moving up together, which I predict to occur later than Brent thinks it's going to occur. He could be right, it could be already happening, and that's the most likely way that I'm wrong on gold.
Okay, next question.
Just wonder if we can get some predictions for Fannie and Freddie.
Yeah, I think it's kind of ironic that they're actually thinking about reprivatizing Fannie and Freddie just in time to bail them out all over again. Because, we should have learned our lesson from the first mortgage crisis. I mean, one of the big problems was the moral hazard associated with having the government guarantee the debts of basically private companies. I mean, whether you want to call it quasi-government, the profits were privatized, but the losses were then socialized. Nobody believed that the government would allow Fannie and Freddie to fail, and they were correct. And so anybody who loaned them money didn't lose, even though they were insolvent and went bankrupt. And what's happened over the last decade or so is the lending standards have, remained laxed. Fannie and Freddie have pretty much taken over the subprime market. So the private sector subprime loans went away, and now they're all issued by Fannie and Freddie. During this new housing echo bubble, which I think is actually in many cases bigger than the bubble that popped in 08, Fannie and Freddie have made a lot of money issuing mortgages that are ultimately going to default. And as they've made that money, they sent it to the U.S. Treasury, and that has made the deficits smaller than they otherwise would have been. But now they have a very toxic loan portfolio, and if they're going to bring that thing private again, I don't know how much bigger they'll be able to blow it up before it implodes, but we're going to be looking at a bigger, the losses this time when they fail again are going to be bigger and cost the taxpayers even more money. And again, instead of sending checks to the U.S. government, they're going to be sending big bills, and that's just going to exacerbate the size of the deficits that we need to finance.
These are actually the first great question about investments, because these are volatile stocks. I was actually buying Fannie Mae on Friday. It was up 33% on the day. That is fantastic. I love volatile stocks like that. I love the whole...
So Fannie Mae is a penny stock?
It is. Yeah. They're anything under $5. I don't trade just under $1 a share.
Did you sell or?
Yeah, no, I sold. I made a few $100s. I trade with a small account. A few $100.
So you're going to use that to buy Peter beer at the football game tonight?
Some of his beer, not all of it. Peter drinks a lot, but...
Yeah, and if you do that a few more times, you can get a suit.
Yeah, exactly. One of these days, I'll be able to afford a suit. But that is my kind of pattern, where you have a Friday run-up with a volume gain and a percentage gain and a nice catalyst leading into a long weekend. There should be some nice bidding, nice gap up on Tuesday. That's my pattern.
Excellent. Next question.
Thanks, guys. Great panel, by the way.
This guy looks like a Croatian hitman.
Yeah. So thank you for that. Likewise for you as well.
I'm kidding. I know he's Croatian. Don't think I'm making a racist remark against Croatians.
And a hitman.
That part I'm not joking about.
Business cards will be given out after. But this is a question for Brent and Erik. So the consensus is you get $1 up, gold down. However, if you do have a scenario where they start to move together, at what point in a price break for gold would you say, you know what, I'm going to discount the pullback. We're going to just move straight up? Because the charts kind of say that's possible as well, right? It's an inflection point.
Yeah, listen, the reason I say you need to own gold is for all the reasons that Peter says you need to own gold. You do need to own it. All the things that Peter says is going to happen are going to happen. I happen to think it's going to go down before it goes up, but if I'm wrong, I'm wrong. And I think the price level, if you're asking for a specific price level at which I'd be wrong, I think a lot of people talk about the 1350 to 1400 range, and I think that's right. If we can get like a monthly close and we stay there for a month or two and then we break above 1400, I think it's probably going the other way.
Erik?
I agree with that. 1350 and 1400 are good numbers, but again, I think it's...
But how long does it have to stay there for you to really be... with that? That's the answer, I think, is if it breaks 1350...
When would you get in, Erik, if you were...
I'd be looking much more closely at the correlation to the dollar than I would be looking at the absolute price level. And we're already seeing lots of days where both move up together, which is unprecedented in recent history. And I think if I was going to do something, it would be the pairs trade, because there's plenty of room to get suckered into a bull trap on gold. But if you are long both gold and the dollar index, if gold takes a dip, you're going to be hedged by that long on the dollar index.
Yeah.
And the scenario where they both go down together, I can't think of why that would happen.
Yeah, but as far as the gold that you need to own, I mean, to me, even if you think gold's going to go down, I mean, the downside is minimal compared to the upside, ultimately. And I think, if you're waiting for gold to break out on a chart or maybe get above 1,400, the problem is it could do that and start moving up in 100, 200-point moves in a day. And then, of course, you might get scared. I mean, can I buy that? Let me wait for a pullback. And before you know it, you're back near the highs at 1,900. Do you buy it then? I mean, if you're going to buy your gold, who cares if it goes to 1,000? I mean, it's not that big a deal. If you're trying to figure out how to use a leverage trade, or you're using options, well, yeah, then it's a different story. But if you're just talking about the gold that you're going to own to have 5-10% of your portfolio, waiting for it to potentially go down 20 or 30% doesn't make any difference, because you could just as easily end up spending more than that. You could always buy more if it goes down. I mean, it's not like,
And Erik did say that during his talk. He's on a screen all day. So Peter's also correct saying if you got a day job that isn't in watching the screen all day, Erik's got the flexibility of reacting quickly, where most people, for example, if you work for the CBC and, writing about our wonderful Prime Minister, you're busy,
Work is too
And as
strong
much
a
as
verb
I
in that
never
case.
predicted it, I agree 100% with Peter Schiff on that one point only.
Okay, I just thought, Tim, you've probably never been to a mine, have you? I'm going to take you up to a mine in a truck, not a Lamborghini, but in a truck, and you'll see what real money. You've probably been to the Fed or where money's created, but I'll show you what real money's created with gold. Well, I got a nice SUV. Don't worry about it. You'll ride in style. Don't worry. Next question.
A question for the panel. So as we head into a recession and we're long gold. What are other things we can turn to mitigate the risk with the recession? Are we going to non-North American bonds, or what else can we turn to?
Well, again, my take on a U.S. recession is it's going to provide tremendous relief for much of the world, because I think what has been inhibiting many of the world's economies is the fear that rates are going to keep rising, the dollar is going to keep rising. That has been increasing, putting pressure on interest rates, putting pressure on corporate earnings and the cost of living, and putting upward pressure on consumer prices outside the United States. And I think when the U.S. goes back into recession and people see us as the emperor without clothes, and the U.S. economy is contracting, and the Fed is printing all this money, and the deficits are going up, and the dollar is falling, that means that all this dollar-denominated debt that a lot of foreign countries have, the real value of that debt is collapsing. That means the burden that it places to repay it is collapsing. The interest payments are lower, the repayment of the principal is lower, and then as the dollar weakens, commodity prices are rising. There are a lot of countries that will benefit from higher export prices. And so I think that there are a lot of parts of the world that are going to benefit from this change. I mean, Americans, we live beyond our means, and that exacts a cost on everybody else who has to support us. All the countries that lend us the money that we borrow, all the countries that produce the products that we consume but don't pay for. As that changes, I think there's going to be a lot of opportunities to profit from a basic realignment in living standards.
At least you guys have some gold in your vaults. We got nothing here in Canada. At least you guys have some gold in your vaults.
Well, I don't know.
We got nothing here in Canada. Next question.
But you still have it in the ground, though. You can dig it up.
Let me just follow that up.
Not if you follow Tim's advice.
One thing, like a lot of people, coming up to me or asking questions here, like, what should we do right now? Cash and just staying completely liquid is a position, and oftentimes it's the best position. So when you don't know what to do, you don't need to just get into anything. Oftentimes people rush into something, then it doesn't perform well, then you miss a perfect opportunity because you're in a bad opportunity. So learn to have patience. In my, 20 years of experience. I know I'm young, but I've been doing this a while. Having patience and just being prepared, not necessarily being in an asset or an investment all the time is best.
Now, just to annoy Peter Schiff more, because I know he's got an engagement to go to, I've decided to run this a little bit longer. Next question.
Saw an interesting chart the other day showing the performance of gold and silver mining stocks from 1920 up to present day. Previous to 1970, when the price of gold was fixed at $35 an ounce for the commodity, and interest rates were positive, there were some severe spikes, peaks and valleys. What were they attributed to? What moved mining stocks in that era when you had a fixed price for the commodity? I can think of the Korean War, the Cuban Missile Crisis, and the Vietnam War. Or was it just basic fundamentals of supply and demand?
So a few things that a lot of people in our, I'll take that one on because I'm more of a historian on the financial statements. But a lot of people forget, which today people say, Marin, we don't invest in gold stocks for yield. Back in the 20s, 30s, and 40s, that's exactly why you invested in gold stocks. They were great yield players, and I'm going to publish something on that. That's a great segue to what I've been spending a lot of time on, going, what has happened to our sector within a generation and a half, where it's now become common acceptance that you don't buy gold stocks for yield. I say bullshit on that. So we'll find that out coming in. Next question.
There's a lot of interesting things discussed. It is scary for me that Canada has no gold reserves, 0 ounces basically.
But we have it in the ground. The government will probably take it.
A lot of companies in this room will benefit from that, but how long will it take us to take it out of the ground? And will by that time Russia not be this?
So the fastest mine built,
makes us a slave country basically.
The fastest mine built in Canadian history from discovery to actual production was Malarctic, done by Sean Rosen, who's here, and the team at Cisco before they got a hostile, before they sold. And that was 7 years from discovery to production.
7 years?
7 years was the fastest.
So for 5 years, Canada's going to be at the mercy of the countries that are hoarding it right now. That's kind of scary. But I'm more in line with what Peter Schiff said about risk-reward, looking at the big picture. So upside potential.
And what's your question?
So my question is, hypothetical example, we go into a depression, the US dollar has lost all faith. What is your target for the gold price in a depression? And how will the media impact that compared to 10 years ago when a ripple effect can travel faster over social media, where Timothy Sykes has an advantage because 70% of people's research now starts online on social media for financial advice these days. Like the Turkey pastor that wasn't released, US made sanctions on Turkey, Turkish lira dropped, bank holdings in Italy, Spain, France that have a lot of Turkish lira dropped, and then US stocks fell 4% that day. So what is your target for gold in a depression, and how will the impact of media push prices compared to 10 years ago?
So I'm assuming a depression global or just?
Obviously.
Yeah. So, Brett?
I mean, I've been saying for years that gold's going to go to at least 5,000, and in an extreme scenario, it's probably going to be multiples of that. So I'll just stick with 5,000.
Peter?
Yeah, I don't have a price target because there's no ceiling on the price of gold because there's no floor on the value of the dollar. I mean, intrinsically, it has no value, and who knows how close it's going to get to that. But the problem for the next depression is that it is going to be an inflationary depression. It's not going to look like the 1930s when we were on a gold standard. It's going to look like something very different. And again, the other danger is political, because the big political move that people are missing from the U.S. was the socialist takeover of the Democratic Party through Bernie Sanders. People voted for Trump kind of as as a plea, because Trump kind of felt people's pain. I don't really going to get into all that, but I think that when we go back into recession between now and the next election, it's all on the Republicans, it's all on Trump. Whether it's their fault or not, they're going to get blamed. And so we're going to have socialists in control in 2021 when we're in this depression. And so it's going to be all government-based solutions, Keynesian stimulus, borrow and spend, except we're already broke. We don't have the luxury that Roosevelt had. We don't have this huge industrial economy with all this wealth that we can squander. We're already, the world's biggest debtor nation. And so the potential for, runaway inflation is significant. And if we're going to avert that crisis, then it's massive default on debt, not just, private debt, but the U.S. government needs to default on itself.
So why can't you do a jubilee? The Russians, what about a golden jubilee?
What does that mean?
Default.
Well said. We could, look, America has a tradition of default, right? We defaulted in 1970.
Your president did it 4 times.
Well, we defaulted in 1971 because we promised to pay gold and we paid nothing. So, and I think that there's a higher likelihood that we will default on treasuries held by foreigners, which is another reason why they shouldn't own them, because they can't vote in our elections. So it's very easy for American politicians to say, we're not going to pay off any interest or principal to anybody without a Social Security number who owns one of our bonds. Because it's more likely that they do that than default on Social Security. But ultimately, I think they'd have to do both. They'd have to default on all the promises that were made to American voters, who are looking for Social Security, Medicare, Medicaid, Obamacare, pensions, whatever.
Is that the title of your next book, Default?
No. I told you so. It's not coming out for a while, though.
Tim, do you have a answer? No? Erik?
Well, I definitely agree with Brent that we're going eventually, someday, the end game, when the U.S. dollar really does lose its reserve currency status, which I'm convinced will happen in my lifetime, but probably several years.
You could do a cheap plug on your book, which is about that. You can.
Yeah, the book is similar to that, but okay.
Let me do it.
Tim wants a signed copy.
I'm going to show you. Look at this. This is a good time to promote this.
Jim Rickards is with us now.
The Death of the Dollar. I'm going to promote it for you. The Death of the Dollar and the Rise of Digital Currency by Erik Townsend. Zend.
I sat in the right place.
Well, I thought I should keep you and Peter separated.
Something I've noticed, though, I mean, we're going to 5,000 plus, I don't know, 10,000 plus gold price someday when it all comes apart. What I don't understand is why gold bugs think it's going to be good for them. You're not going to be allowed to keep your profits. I'm agreeing with Peter for the second time in 10 minutes. The socialists will be in charge. They'll take your profits away. You are the cheaters who worked around the system and you didn't pay the penalty that everyone else did, and you're fat cats and you deserve to have your gold or your profits from your gold taken away from you.
At maybe a fixed price. What if they brought in a fixed price? Or the people that Tim hangs out with on Instagram, the drug dealers and strippers, may take it too.
But they could do the same thing with, stocks. They could impose windfalls profit taxes on.
But remember,
US
Canada used to charge a tax 3%. People forget this. Before World War II, Canadians were charged a tax with your holdings in your stocks every year, regardless if you made money or lost money. The value of your assets, you'd get taxed. Yeah. So what goes around will come around.
That is one of the reasons I moved to Puerto Rico. Hopefully that works.
Oh God!
I don't pay any U.S. income tax anymore or capital gains tax. So.
But you have to live in Puerto Rico.
Yeah, it's beautiful. Have you been there?
Actually, I haven't, but Louis lives there.
One thing I want to mention, you don't have to worry about if gold's going to 5,000 or below 1,000. Use technical analysis. We don't have to worry about these extreme examples until we start seeing some breakouts. From what I've seen, I just did a cursory look at the chart of gold, and it's very much range bound over the past few years. So at least wait for a breakout. Everyone gets all excited. Oh, the world is ending. The depression is coming. Oh, all this stuff. The title of this book and stuff. I want to see some volatility before you start worrying about this worst case scenario.
Although gold went from 260 to 1,900, I mean, the move from here to 5,000.
Several years ago. I'm talking shorter term.
No, but I'm saying a move from 5 to 5,000 from here is a smaller move than that one, percentage-wise.
But it's still, Peter, I would like to see it get above 2,000
first. A question I have for you, Peter. If you were in a time zone or some underground mine for the last 7-8 years, and you read about what's happened in the last 8 years, where we've gone as a globe, the apprentice is now the president of the country, the debt, everything that's going on with the techs, the FANGs, Tesla, and you didn't turn to the page of price of gold, you would guess today the price of gold would be $5,000. True or false?
Obviously, I was guessing it was going to be a lot higher by now, back then. Yes,
but why hasn't it happened? Everything that the gold bug said, the bad shit's going to happen. It happened. And why is gold not $5,000 today?
Yeah,
that's
it should
a fair
be,
question.
but that doesn't mean it's not going to go up. I mean, it's just a big bubble, and you could be of the opinion, well, then it's never going to happen, but I'm not going to accept that. I'm not going to say that the world is going to be irrational forever. I can accept that people can be irrational, for a while, but, it's not going to happen forever. I mean, things happen that you don't necessarily anticipate along the way that may delay the day of reckoning. And that's been happening for a long time. But the problems are getting bigger and bigger and bigger. So all the problems that I saw 7 years ago, 10 years ago, none of those problems have been solved. They've all gotten worse.
But Japan's kicked that debt road. If you look at real debt per GDP and you see what the Japanese are doing, who's to say that the Americans can't copy the Japanese playbook for 20 more years?
We owe Japan a lot of money. They have a lot of treasuries. Japan is still a creditor nation. They have huge domestic savings. And if you look at the manufacturing sector in Japan, their debt their debt relative to their manufacturing is better. The American GDP is a bunch of fluff. It's 70% consumers spending money they don't have. I mean, our GDP can implode very quickly, and then all of a sudden the debt to GDP is a lot higher. And of course, we have the unfunded liabilities that we have are just enormous. I mean, you're looking at the debt that the government admits to. That's the tip of an iceberg.
Next question. Oh, I'll take you first.
Where does Peter see the dollar, the gold a year from here? A year from
Peter,
now?
at this conference next year.
I think it's going to be higher. I mean, I don't know exactly what the price is, but we're 1280-ish now. I think it'll be higher.
Okay.
So my question is related to oil, gold, and fiat in general. So how do you see the value of renminbi changing, given that Shanghai oil futures contracts priced in yuan can be swapped with gold? And how might that affect the adoption of SDRs, special drawing rights, by the IMF, given that China buys the most marketable SDRs from the IMF?
Erik, I think you'll take this one on.
It's important to understand that this gold exchange for the yuan-denominated oil contract is more marketing than reality. There's no assurance of a price. What they're saying essentially is you can take your profits from your oil transaction, you end up with yuan that you cannot easily export. Therefore, what you do is you use it to buy gold at the market price on the Shanghai Futures Exchange. It doesn't lock in any price. So this idea of gold backed is marketing. It's mostly bullshit. And I wanted to clarify that point. I'm sorry, the rest of the question was what?
Sorry, and the second part was, and also how might that affect the adoption of SDRs? So the renminbi is now part of the world reserve currency group with GBP, US dollar, Japanese yen. So how might that affect SDRs?
Now I have my opportunity. My view is that what's likely to happen, and it's already happening with Christine Lagarde's statement on November 15th, I believe, is we're going to see central bankers recognize that the invention of digital currency, that no one stands more to gain than government itself from digital currency. They're going to outlaw cryptocurrencies, and it's going to be a political race as to whether it's the IMF or the World Bank or a particular nation or somebody's treasury or who that creates the digital currency system which replaces the US dollar as the world's global reserve currency. Now, is it going to be the SDR? Christine Lagarde wanted to be the first government official to stand up and say, hey, we should start looking at this digital currency stuff. She's in the lead only in terms of a press conference statement. I think there's a very good argument, if you look at the actions of Russia and China, that they're already working very, very hard on tooling up with respect to digital currency technology, and they may already be working on something designed to challenge the dollar's hegemony over the global financial system. I think that what eventually replaces the US dollar as the world's reserve currency is a digital currency which is government issued, and I liken this to a space race. The question is, will government issued by what government? All the governments and all of the agencies like the IMF, which are not strictly government, are going to be competing, saying it should be me, and it's going to be very interesting to see who wins. And I'll take the opportunity. I wrote a book about that very subject, which I'm holding up in Jim Rickard's style.
Marion, just to the panel, is Brexit a reality or not?
Can you repeat that question, sir?
Is Brexit a reality or not?
I couldn't hear it.
Brexit?
Oh, Brexit.
Yeah.
Is Brexit a reality, yes or no?
Yeah, I think so. I think the only question is whether it's a hard Brexit or soft Brexit, or however they describe it. But I think we're becoming closer and closer to the hard Brexit, which in the short term would be a disaster for, I think, London in the very short term, but I think ultimately it'd be very good for them.
Peter?
I agree.
I'd agree and add that the real question that I look at is how big and how fast does the contagion occur? And
So who's
is the
next? Who would be next?
Yeah,
Italy?
I think Italy most likely, but things are changing really quickly. Look at what's going on in France with the yellow jacket stuff. Europe is screwed, really, and they don't know it yet, or they're starting to figure it out.
So that euro might be screwed, which means the US dollar may do better.
Yes.
Yes. Following Tim's marketing style.
Yes.
Rex, you follow this kind of stuff.
Yeah, I do. I think that Brexit has to go, because if they deny a referendum, regardless of all the things that have happened ever since, and if you think you can do do-over referendums to favor, in this particular case, the progressive intellect, it's much like the idea you should be very careful in the States about the notion of impeaching Trump. The worst thing that you could do for your own cause, if you were for impeaching him, is to impeach him. That would set off forces that we have not seen. Redoing Brexit and staying in, something like that.
Next question.
Peter, you say that when the United States dollar go down, the emerging markets will do much better. What happens to countries that doesn't borrow money in the United States dollar, for example, like Japan?
I think Japan is going to be fine. I mean, I think the yen is going to rise in value too, as well as the dollar. But Japan is not under a lot of pressure right now because of the idea that the dollar is going to be strong. In fact, the yen has been stronger than the dollar this year. I think last year as well. I mean, the yen is actually considered more of a safe haven right now than the dollar is.
Brett?
Well, I mean, I just think it's funny that we can sit here and talk about all the bad things about the U.S. and the dollar and all the debt and all the currencies are the same. They're all in the same situation. The European Union is a disaster. The euro is a disaster. The Australian dollar is a disaster. The yen is a disaster. The yuan is a complete disaster. It's just a matter of which way it breaks first. And I believe that because of all the institutionalized effect and the momentum and the dollar-based debt in the world, that when the proverbial shit hits the fan, that the dollar's going to get a bid. And I think that's going to knock everybody else's head off, and it's going to end really, really badly. But that's the way I think it goes down.
I think that trade already happened.
Peter's happy. New England just scored.
They didn't score. They almost had a touchdown on a fumbled punt.
And we're going to make this the last question, and then...
Okay, two quick things. First, I would ask all Canadians in this audience here to write Finance Minister Morneau and ask him to rebuild the gold reserves for Canada. Second, it's my understanding that China is buying gold or buying oil and paying it with a gold-backed yuan. Now, is this a gold-backed currency or is it not?
Erik kind of answered this question already.
Yeah, I think I have answered that. The gold-backed yuan is really an explanation. It's what they're really saying is, look, we've got a yuan-denominated crude oil contract. What that's all about is to say it's not just the U.S. dollar anymore. We're beginning the move away from the dollar. We're encouraging other nations
to
move away from the dollar,
now.
and that leads to a huge objection, which is anybody in their right mind would say, why in the world would I trade oil in dollars because in yuan, because I end up with yuan for my profits? What am I going to do with it? I can't get it out of China. They're answering that question by saying you can use those yuan to buy gold on the Shanghai futures market, and that's the way to solve your problem. But there is no real backing or price connection. It's just an explanation of what to do with your yuan.
And then there's a second part of that too. Is that the yuan is such a great currency. And if China is on the ascension and going to become the next global power, why do you need to get out of the yuan so quickly? Why do you not just hold on to the yuan? Because you don't trust it, so you need to put it into gold. That's why. So the fact that China floats this as this option to get out of the yuan and into gold is not exactly a great argument to buy the yuan.
Vancouver real estate? So I want to take that opportunity now to thank Joe and, Joe, I was thinking back 10 years ago, Jay and the whole team at Cambridge House for putting on the show. We do this for you guys. I want to thank all the panelists who came and put extra time. Peter, I know you said, we have to stick on schedule, but I thought, what the hell? Let's have fun with this. And tomorrow morning, I'm opening the show that I'm pretty sure I'm going to become the most unpopular person in the uranium sector in the world, because I'm going to reveal something that nobody knows that I've been kind of advising the utilities, that I think the utilities are going to do, that's going to really debunk the uranium bull market. But yet, I think I figured out how to make money on it. So that's tomorrow morning in a bullish stand. Thank you very much.